Onwards, we're going to have a look at the move on cable and particularly the last phase of this move. So what we got is the first comments on if they filled 600, it would be a hung parliament. Gets the move up, and then the idea of not contesting Conservative seats creates this second move, so volume picking up again. What I wanted to have a look at was this exhaustion phase of the move, how to spot it and how to enter the trade. What we got from a bigger context, there was the beginning of the move through 40s, through the trend, up towards 92 was your sort of key area. Once through 92, we then push, and then you got this final flick up. That was where your exhaustion seemed to come in. You could see this and you feel it on the ladder as it pops higher. That was the point where you start thinking, yeah, now you've got a potential exhaustion on. So I'll just start this off just here. So just getting up through the 92. So here we go. Trading around 78 just at the moment. We're then going to start getting this next little bit of movement up, and your exhaustion areas comes in at around about 29.10. So no major level. It's not sort of a point, you know, it does tie in with this high, but it's not really a point that you're thinking, yeah, that's the end of the move. So this is the second phase of the move. This is this little bit of move up here, up towards the 90s, up towards that 92 level. So if you're long on this, you'd be quite pleased with that. Got up to around about target. Happy with the situation that we've got ourselves into. But really what we're going to be looking for is the little pop up at the end, to give you that exhaustion, to illustrate where the end of the move is perhaps coming. So here we go, up towards 00. Move still going. We've moved through 92 relatively easily, so that should be giving you some confidence to the upside. Now, if you're long, not only is this an opportunity for reversal, but this is a good sign at the end of a move. And it's something that even if you're not going to try and play reversal trades, is a useful thing to understand and to recognize, to tell you now's the time to get out of the trade potentially. I'm always looking for this on any kind of news event type move. You'll see a market push and push and push until people panic and hit high. When they do that, that's the point to be looking for that reversal back down. So still steady on the movement up at the moment. This is still where you'd be feeling quite confident of a continuation. We traded up towards 2-3. We can't get back below 92. It's all looking okay for a continuation higher. What we'll then see as we move up towards 04, the steady move up then starts to change. So at the moment you're still thinking, yep, this movement is going higher. We're still sort of ticking through 3s, 4, 5, 6, nice and steady, continued buying. And there we go. All of a sudden, 4s straight to 12s and backs off. Now that doesn't necessarily mean the move's over, but what you'd really need to see is this shouldn't be falling too far. And then if you're looking for that reversal, it's when it gets back up here and you start seeing that it can't find any buying back above 6, back above 7. That's where you can look to execute your short. And often with these reversals, it's going to be a case that you don't actually often get the chance of selling it at the ideal prices up at the top. You end up having to sell it a little bit lower, but it shows you where your stop should be, just above the high. If this has been an exhaustion, then what you know is that last bit of buying is just people being forced to buy, not choosing to buy. Therefore, they're out of their short positions or they panicked into it at the top. They're not going to keep on buying, meaning that gives you the end of the move. And now you can just look for your rotation back down. I wouldn't be looking far on this. Excuse me. This would more just be a case of rotation back to perhaps 92s. The fact that you get a 200 lot coming in gives you an ideal place to be looking for an exit just above that 200. Gives you a nice little 10 tick scalp. And that's what you're looking for those reversal trades. It's just playing it against that last exhaustion, that last flick up. It's a forced buy rather than a sort of buy to generate or to build a position, and that's the one that you're trying to play back against. Right, moving on, last thing, look at gold. Now the idea this week or early on this week was that after last week's double distribution, which you can see the bottom of here on the profile, we would perhaps need a bit of time spent in this lower part of the range outside of value. Crucially though, we did close that double distribution near the low, which is a sign of weakness. Morning trade and a little bit of the opening trade in the US until the US S&P session started, which remember is Veterans Day, so it's not a full-blown session. It's going to be a more muted session, but that was then where we started to see once again this kind of risk on type idea, and gold continuing to the downside. So what's going to be really key now is whether we can get the close below last week's lows down at 57.8. Can we get the close down below there? Can we start then touching down towards 1443, 44 area, and then onto this range that I flagged up this morning between 39 and 15s. So that's the areas that we're looking for. That's what we're looking to see sort of trading down to. Tonight's close is going to be very important, but early on this week, it does look like we are setting up this larger move, and it's starting to now look like a position or a situation where this is becoming a bigger sea change in gold. That was where we had previous highs that held. Since then, also we had previous highs, then the next lows that held. Since then though, this move now is starting to really tip towards the downside and setting up potentially a further continuation, particularly if we can start getting into this range down here. So that's where we're looking in gold at the moment. Play of the week now, as long as we're staying below last week's low, is now very much tilted towards the downside, and a look towards 44s, 39s, and then potentially even 15 for the full sort of trade through that old range. So that's where we are for gold at the minute. Keep your eyes open on the close for tonight, and also any of this sort of continuation of the risk